Hi guys, welcome back to my YouTube channel. This is Mumbua, your future CFO. And today I want to take you through how to analyze the income statement of an organization to know how the organization is performing in general, and also to analyze. Let's say, for example, you have different subsidiaries, you have different divisions in the organization. If you want to know the performance of the division as a whole, or maybe a subsidiary, how it's performing, how to analyze. If you want to compare your performance as an organization against competitors, which are of different sizes, how do you go about it? So without much details, let's jump in. Let's start doing the analysis. When I talk about the income statement, guys, I'm talking about the statement that shows the different sources of income and the cost that the organization has incurred in the process of generating the different incomes. We're going to be looking at income statement of an organization called GMT Limited. We're going to be comparing the current performance of the organization and the prior period. That is like the preceding year before to see how the organization was performing. So the sales of the organization, the cost of sales, the gross profit, the selling expenses, the admin expenses, operating income, other revenues and gains. Maybe this organization has, we could be having foreign exchange gains. We could dispose some fixed assets, the PPE at a gain. Those are some of the sources of the gains, revenues and gains. Maybe interest income from an investment. The EBT, that is the income before interest and tax, interest expense. We have a long-term debt. We are paying interest on the long-term debt. The EBIT, the tax, we need to pay tax. We have a corporate responsibility of paying tax. Then the net income. So we're going to be starting with vertical analysis. When I talk about vertical analysis, we're analyzing the income statement from the top, which is sales, the main source of income, all the way down. So our base is going to be sales. So we express everything as a percentage of sales, and this is how we do it. We say our sales is $1.8 million divided by the sales itself, which is P5. So you get 100%. So we want to express everything else as a percentage of sales. And to do it very fast, we're gonna fix the sales, the denominator, so that we are able to do it very fast. You just need to drag it down. Then now everything else falls in place. So that is the percentage. Our COG is 80% of the sales, and our net income is 9.8% of sales. Then we're gonna do the same for the prior period, express it as a percentage of sales, which is 100%, then everything else as a percentage of sales. So let's do this together. So this is our COG divided by sales. So you're gonna get the percentage, which is around 83%. So our COG for prior period was 83%. For the current period is 80. So our sales have grown, but our COG has gone down. It's a good sign. We are generating more sales at a lower cost of sales. It's good for the organization. Our gross profit was 17% prior period. This period, it's grown to 19%. You know, when you see income growing, everyone is happy. The shareholders are happy, because that is what every organization wants to maximize on the returns. So let's look at the bottom line, which is the net income. Our net income has grown from 8% to 9.8%. It's a good sign. We're doing well as an organization. Another thing that you need to look at as a CFO is your expenses. At what rate we increasing sales? So what about expenses? Are they growing? If they're growing, is it a red flag? Let's say, for example, our selling expenses for prior period was 2%. For the current period is 2.8%. So our sales expenses have gone up a little bit, could be attributable to the high sales, but maybe you need to look deeper and get an understanding of what is happening there. Our general admin expenses, there's 8%, 0.8% of sales, which is, it's a good sign. Prior period was 1%. So our sales are growing, our admin expenses have gone down. So it's a good sign. So that is how we do the vertical analysis. You express everything as a percentage of the sales. Then now you are able to analyze different performances for different periods, or maybe different organizations of different sizes. You want to know how you're performing compared to your competitor and your organizations of different sizes. You express everything as a percentage. Then you're able to tell in general how you're doing as an organization. So very first, let's do the horizontal analysis. And when I talk about horizontal analysis, we are analyzing performance where we are using one period as a base vis-a-vis the current period. So we can use our prior period as the base vis-a-vis the current period. Like our sales last period were 100%. So everything in the prior period will be 100%. Then now we express it as a percentage of the next period. So let's say, for example, these 1.8 is a percentage of the prior period. So this is 120,000. So our sales have grown. Our COG was 100, now it's 116. So it's growing. When we look at, let's say, for example, our interest expense was 100% the prior period. Currently, it's 83. It means our interest expense has gone down. And looking at the figures, the prior period, we paid interest of $12,000. At the current period, we are paying only $10,000. So our interest expense has gone down. Maybe we fully service an outstanding long-term debt, or maybe we paid off some of the debt that was increasing our leverage as an organization. Our net income has also grown from 100% to 154. So basically that is what we call horizontal analysis when we're using one period as a base. Let's look at another way you can analyze the income statement. You can do what we call horizontal analysis, looking at growth from one period to the other. Let's say, for example, our current period, we want to see how much our sales have grown by what is the increase of our sales. So you just get the growth of the different line items. So I've gotten the growth. Now I want to express them as a percentage of the prior period, because we are basing our growth on the prior period. We want to know from prior period to current period, how did we perform? And I want to see these as percentages. So I'm gonna express them as percentages. And I want this to be 0. So that is how you do it, guys. You get the growth from one period to the other. So our sales have grown by 20%, our COG by 16%, our gross profit by 40%, selling expenses by 43%. It's a big growth. Our general expenses by 25%. So these are two red flags. You need to dig deeper. You need to understand. If our sales are growing by 20%, why do we have expenses growing with a higher percentage? You need to investigate and know exactly what is happening there. Maybe like selling expenses, we could be advertising to sell more, maybe sales promotions to sell more. But it's important to dig deeper and get an insight, get an understanding of what is happening to the different expenses. Our bottom line, that is the net profit, it's grown by 54%. You know, when you see income, the net profit growing, everyone is happy. The shareholders, the employees, the stakeholders, everyone is happy. It's a good sign. But as an organization, you need to look for ways how you can even grow it further. Let's say, for example, if we reduce on our selling expenses, the bottom line is gonna be even much better. If we reduce on our general expenses, we can see ways of cutting on the general admin expenses. The bottom line is gonna be better. So guys, that is how we analyze the income statements to see how we're performing as an organization. Maybe against a competitor of a different size, to see how different segments in the organizations are doing. Also to see how subsidiaries are doing. One subsidiaries vis-a-vis the other, or maybe the organization as a whole. So guys, thank you for your time. Thank you for staying with me all the way to the end. I don't take this for granted. And don't forget, hit the button, subscribe to my YouTube channels to get notification of future videos. And together we're gonna grow strong, guys. Thank you for your time. Thank you for everything. If you learned something new, please don't forget to subscribe. Thank you, guys. Bye.